at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
Okay, Fed Chair Jerome Powell throwing some cold water on investor hopes for more rate cuts this year, saying the board was deeply divided on how to proceed. But the central bank did cut on Wednesday, bringing interest rates below 4% for the first time since 2022. All right, Larry, you can go anywhere you want to go on this. What happened yesterday, what it means for markets, what the future holds when Jay Powell doesn't have that job. Dealer's choice.
Well, I don't necessarily disagree with what I think he said, that we don't know about December. We don't know about December because we don't know about September or October or November, for that matter. You know, there's a dearth of information that presumably the Fed uses. I mean, we know what markets are saying. The Atlanta Fed is saying 3.9 in the third quarter, right, ending in September. I hope he's not making that decision just because it looks like the economy is strong. You know, the Fed has a phobia about growth.
Yeah.
Growth does not cause inflation. It does not. On the other hand, you know, the last CPI we got was not a fabulous. I know it was below the street and triggered a rally. But the 3-month change for both the top line and the core was 3.6% at an annual rate with a target of 2. And the 12-month change was 3.0 for both with a target of 2. So in that sense, I'm not completely at loggerheads. I mean, we need now. Energy prices seem to be coming down. Gasoline prices seem to be coming down. Shelter prices seem to be coming down. So by the time we get to December, if we have good information, it may be time to cut again. Okay, inflation will be a lot lower. But I'm just saying, right now, I'm not crazed over it.
He also knows that when he speaks, markets react. They reacted yesterday. In the Urban Dictionary, they have this word, flexing. I think he was flexing his power, still saying, I'm in charge here, letting Trump know that, letting the market know that. He could have just sat on this uncertainty and done whatever they're going to do in December. If they get more data and things change, they can do that. He didn't have to say what he said yesterday.
Lawrence thinks he might have been inadvertent. It was a response to a question, wasn't it? He kind of popped it out. So we're polling the next Fed chair, because we need a new Fed chair. And I'm just going to quickly, the Twitter X, which we're polling on Twitter X and Instagram, many more votes on Twitter X. The leading candidate, according to this so far, is Kevin Warsh.
Okay.
Number two actually was me and a write-in.
Hey, let's talk about that.
Number 3 was Kevin Hassett, another brilliant guy. And Scott Bessent was, he may have been tied or close to Hassett as the third. A lot of people, on my panel last night, I had Steve Forbes and John Carney, and I did the riff on who should be Fed chair and why we need a supply sider running the Fed, tax cuts and tight money. And both my panelists said Bessent. They didn't. There are 5 candidates, according to Mr. Bessent. Both my panelists, Steve Forbes and John Carney, said Bessent. So, and Bessent got some votes. But Kevin Warsh is the winner. Yeah, and Kevin Warsh is winning the poll.
And not a guy who's known to be a dove. I mean, Kevin Warsh, to me, in that group, has the most evidence of being a fairly hawkish guy, cares about inflation first, not as interested in the dual mandate.
Well, I think...
Would he work well with President Trump?
Yes, yes, he will. Okay. I wouldn't say. Kevin Warsh is a supply sider. Okay? And that means tax cuts and tight money, or tax cuts and a strong dollar. He's for that. He's absolutely for that. Look, I think they made a mistake. They should be running the balance sheet down more. $6.5 trillion looks weak against $9 trillion, but, 10, 15 years ago, it was less than $1 trillion. And the balance sheet, quote unquote, which we used to call the monetary base back in the Milton Friedman days, I still think they should be running it down. I think they made a mistake. I really do.
I mean, rates are now below 4% for the first time in, 3 years. Larry, how important it is not just to get lower rates, but to get some of the deregulation, for example, that even President Carter, President Carter gets a lot of guff, but he, as you know, deregulated a host of industries, which sent President Reagan up for a record run. So doesn't President Trump really have an opportunity here to do some long-term deregulation that could really fuel the economy?
Well, I wouldn't quite have put it that way, your last sentence, but let's not quibble over that. Deregulation is very, very important, and it's operating. I mean, look, the one big, beautiful bill is profoundly pro-business and pro-growth and pro-jobs and pro-wages. I mean, it's a very good piece of legislation, and it's a good thing they did one bill, because you can see now with this CR stuff, they never would have gotten 2 bills or 3 bills, which was what I argued till I was blue in the face every night on the air, and Mike Johnson also. So, yeah. But Kevin Warsh, believes in low tax rates. He believes in deregulation. He believes in a sound dollar. But he would like to see that monetary-based balance sheet come in a little more, because, we have not totally conquered inflation, I think, right?
Okay,
now,
agreed.
On the supply side, more investment in production will lower prices. You're putting more goods on the market. That's very important. The same for deregulation. It's absolutely the same. But monetary effects are important, too. And I think they should have kept running that thing down. I really do.
Lydia, you brought up last hour jobs, and I think that's where your head is in terms of how Jay Powell's maybe thinking about what the Fed's doing, some of the other board members. I wonder if, when you saw what he said yesterday, the decision that the Fed made yesterday, do you think at this point they're still very, very focused on jobs as the thing that could deteriorate fastest, and they don't want to be behind that curve?
I mean, it seems like there's a big question mark when it comes to jobs, because it doesn't seem like we're creating a whole lot. We're not getting the data that we need. We do have some other sources like ADP and such. But, the headlines that we're seeing recently, Larry, the layoffs, we've all been talking about them, the AI-driven layoffs. Obviously, we got to be the leader in AI. We can't sit on our, on our haunches and just let that go by. But it's coming at some expense, and we don't really know what. It seems to me like we don't have a crystal clear picture of what the labor market looks like at the moment. It's always in the rear view anyway.
I mean, Amazon announced, 13,000 layoffs? 14,000 layoffs.
And there are a lot
as a result of AI.
I mean,
there's a lot of people saying that's just the tip. This is just getting started.
But there are. Look, the answer is yes, yes, yes. UPS is going to take out almost 50,000 over time. Amazon's numbers, they were talking about maybe up to 30,000 over time. Is it AI? Maybe partly AI, maybe just corporate downsizing that we see periodically. Profits are booming with stocks. But there are 160 million some odd people working. So I don't want to. Now, private payrolls were slowing down before the strike, before the CR. So you're quite right about that. I don't think another quarter point here or there is going to affect that. I mean, if you want to boost private payrolls, you want to create new businesses that will hire new people, right, and put these new AI, quantum computing tools to work. What you need is immediate cost expensing, depreciation, and low corporate tax rates and deregulation to, get these government off our back and reduce the paperwork. It's a fiscal issue, and I think that's why Trump's policies are on. They're on the mark. It's absolutely another quarter point by the Fed. I don't think does that matter.
It's the Kudlow dictionary. The word is growth. You could look it up.
Growth,
like the Urban Dictionary. Jay Powell.